Hey guys, welcome to Yusan, and we are talking about investment beginner guides in the video series number 4. In the past video, in the part 3, we discussed about that age factor, right? And in the part 2, we discussed about the why investment is important, and then on that we discuss about that age factor, asset allocation, and that if you are 18 to 35, where to invest, and so on, and we divide it into 4 categories of age group, where we tell about that where to invest. Now in this video we will discuss about if you are a first time investor, right? If you are going to invest first time, so what terms you should know first, where to invest, okay, what kind of investments will you make. So there are various type of investing, right? First is capital market, then equity share, third is debentures or bond, and we will discuss only those three. Okay, so first is capital market. Among all investments options available, capital market is considered the most challenging as well as the most rewarding. Capital market is a market of security, equity and debt, where companies and government raise long-term funds from the public investor, and where investor can subsequently trade among themselves in those securities. So what is capital market? Capital market is equity and debt funds, where companies and government, right, both raise long-term funds from the public investors like you and me. This is all about the capital market, and it captures a lot of percentage from the market. Now equity share. What is equity share? Typically personal savings of an entrepreneur, and if required, then contribution from friends, relatives are the source of fund to start a new business for a large project. However, as the fund requirements are large, those will not only require them loans but go even beyond that. Thus, availability of capital is a major input for setting up for expanding businesses on a large scale. Those is a way to raise equity beyond oneself or form a limited pool of a small circle of friends and relatives. This is by way of raising money from the public across the country by selling shares of a company. From the purpose, so what we are talking about, that the selling share of the company, right? So for this purpose, the promoter has to invite subscription. Not who is promoter? Promoter means the owner, right? Those who start the company first, to invite subscription throughout and offer documents which gives full detail about promoter's track record, the detail about promoter's track record and the company, the nature of the project, the business model and accepted profitability, etc. When an individual is comfortable with such an investment opportunity, he may apply in the company's public issue and upon allotment become a shareholder of the company. It means the ownership, some sort of ownership, some shares of ownership he bought. This way, through aggregation, even small amount available with a very large number of individuals translated into usable capital for corporates. Use small saving of say even 5,000 can contribute in setting up say 5,000 crore telecom plant. This mechanism by which companies raising money from the public is called primary market. So we learn about primary market, right? If there is a primary market, then there will be a secondary market. Then what will be the secondary market? Let's discuss. So first we learn about how a company raise their money, right? If they need lots of money and they don't want to take loan, because for loan they have to pay interest, right? So what they did, they divide their ownership into some shares and they sell them and tell the people that whatever profit will be we earn, we will share with all of our shareholders. Now come to that secondary market. Importantly, when you as a shareholder need your money back, you can sell those shares to others or new investors. Such trade do not reduce or alert the company's capital. Stock exchange bring such sellers and buyers together, brought stockbrokers or facilitate trading. As such, companies raising money from the public are required to compulsorily list their shares on a stock exchange which has nationwide trading terminal. This mechanism of buying and selling share throughout a stock exchange is known as secondary market. Right? In short, companies raising money from the public are required to compulsorily list their shares on a stock exchange which is nationwide trading terminals. This mechanism is secondary markets. Now, as a shareholder, you are a part owner of the company and entitled to all the benefits of ownerships, including dividend, company's profit distribution to owner. Right? Over the year, if the company perform well, other investors would like to become owner of such a company by buying its share. This increase in demand for the share leads to increase in its price. You then have the opportunity to sell your share at the high price than at which you purchased it. You can thus increase your wealth, provide you make the right choice at the first instance of buying shares of the right companies. The reverse is also true. So be careful. So it is therefore important that an investor make an informed choice. Right? Now come to that last part of this equity share is equity is an appropriate investment venue for an investor who is prepared to take risk in order to generate high return. Over the long term, return from equity share at aggregate levels have been historically higher than most other avenues. As on 31st March 2011, the BSE Sensex had generated a compound annualized return of 17% over the last 10 years. So keep it in your mind. Now come to that last part of this topic is debentures or bonds. We discuss about the bonds. Now there are primary three type of bonds: NCD, PCD and FCD. Now what is NCD? Non-convertible debenture. Total amount of redeem by the issue at a specific time. This is non-convertible debentures. Come to that second, PCD, partially convertible debenture. The part of the value is redeemed and the remaining is converted to equity share at a specified price and time. Full convertible debenture is FCD. Full value is converted into equity at a specified price and time. Now, bonds or debentures are contract where one party is the lender or investor and the other party is the borrower company. This contract specify the rate of interest, the periodically of interest payment, monthly, quarterly, annually, and the maturity date for repayment of the principal amount like 3, 5, 7 years. The term bond is used for the debt instrument issued by the central and state government and PSU while the term debenture is used for debt issue from the private corporate sector. So the difference is when we call bond is used to debt instrument issued by the central and state government and PSU, where the debenture is used for debt issue from the private company sector. These instruments are normally secure charge against the assets of the company and all are required to be rated by credit rating agencies. Okay, so credit rating agencies give them rated A rated, AA rated. Okay, good, very good, it means. So debenture bonds are ideal for investor seeking assure and regular income. These instruments typically offer interest rate higher than the bank fixed deposit. Okay, so some bonds offer tax benefits of the investor. So rather than fixed it in a bank or make a FD, it's better to buy bonds or debenture. Now that is all in this video. So what we learned in this part 4, that is that what is capital market, then we learn about what is primary market, secondary market, what is equity share, okay, what is dividend. Then if you notice what I'm talking about, then we also see our statistics of 17.6% of compound growth in the last 10 years from 2011 BSE Sensex. Now then we talk about debentures and bonds at the last. So that is all about for this part 4. Now in the part 5 we will discuss on what? We will discuss on that IPOs, what is initial public offering, then FPOs, what is further public offering, then we will discuss some do's for IPOs or FPOs and don'ts. It's mean what to do and what not to do when it's about IPOs and FPOs. So I hope guys you like this video and keep watching Yusun, and for learn more about investments and any related to market, so please comment on that very comment section, and thank you for